The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 10th magnificent Monday edition of today's Trader's Edge. I'm host Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific weekend, a magnificent Monday. Let's make sure we do everything we can to make it magical. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. We're going to go take a look at the circumstances that the bulls and the bears, the buyers and the sellers are throwing out to you and I. I'm absolutely grateful for your presence here. I'm honored by that presence. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, we'd love to hear from you as well at 727-445-1044. This is Magical Monday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 231 points at 17,604. S&P up 25 points. She's trading at 2103. NASDAQ Composite up 56 at 5,100. Even Steven out there. The Russell 2000 up 14 points at 1221. The DAX finished off its day up 114 points. The FTSE was up 17. Goldilocks on a move this morning or this afternoon up $11. Silver's up 46 cents. She's trading at 15.29. Light sweet crude is up nearly a buck at 44.86. Moving to the upside again. Oh, that doesn't look right. Something is really messed up on this part of the system. I should have rebooted. So we will skip what it is that's moving out here to the upside. That's weird, pretty weird. Didn't look at that portion of my system all day. Moving to the downside, though, looks like Bluebird Bio, and we're not even going to pay attention necessarily to the individual stocks just yet because maybe there's something that needs to be reset during a breakout here. But the markets are moving higher, so let's go. And that was to be anticipated. And that was to be anticipated for a number of reasons. So let's first start. How I first want to start today's session is always a matter of keeping things in perspective. And I think that the easiest way to do that is we're going to take a look at, this is a Dow chart. This is a long-term Dow chart. It goes back into the 1990s, so I guess really not that long, right? And it's a quarterly chart. And the blue squiggly line that you're looking at on my screen are the closes during each of the quarters out here. You know, so it's a calendar quarter. So that blue line doesn't represent intra-session high or low, just simply the close, which actually is very revealing to you and I. Now, the reason that I want to show that is because the most important thing that you can do when you're trading and investing, when you take a look at a number of different tools and indicators that you use out there, the majority of the indicators in the market are momentum-based indicators. And the momentum-based indicators are absolutely the wrong type of indicators to use in what? A sideways market. And what I want you to take a look at, so when you've got a market that is trending either to the upside or to the downside out here, and you can see we've had plenty of those style markets going back into the 1990s, you can see that the market style that we are in right now, if you take a look, this is since October, by the way, of 2014. So we're going on what equates to at least, 8 months out there, something like that, September, October. Yeah. So we're looking at about 8 months out here of really what would be considered sideways action, right? These are all closes. And so it's really important. And this is where what I'd like to, the message, if I were going to get across really two messages, it would be that if you are an intraday trader, don't get too married to your position. Be willing to move to both sides out there. Don't start believing that the market's going to move down and it's going to crash and take all that bad news that's out there. Trade the patterns. Absolutely trade the patterns. And as well, to the upside, if you're bullish on the market, be able to have quick fingers. I like the David White's phrase, sell when you have to, not when you can. or sell when you can, not when you have to. He'll probably just yap me upside the head for that one, for screwing that up. Sorry about that, Polar. But this is the market style that we are in right now. A market that gives, in a consolidating market, something moving sideways, it gives a little bit to the bulls, a little bit to the bears, and neither side should really take a great reverence in either side of the trade that they're on out there. Now, if we take a look at what's going on inside of the market, we can see that price right now is bumping itself up into a level of resistance. On Friday, then we're just looking at a 5-hour chart for the ES Mini, for the S&P futures out there. And we'll just simply use that for the moment as a gauge as to what's going on. You can see that on Friday, you did have that wide-ranging bar that took place between 9 o'clock, and so we got 9 to 2 o'clock in the afternoon. We saw price go ahead and move lower and actually break through the bottom of that. I actually was saying, Now, I also know that it was coming into a swing point back here, so it's really just testing some horizontal levels of support. And we can see that, obviously, after the 2 o'clock time frame, the market made a low there. We can go take a look at a 30-minute chart for the ES Mini. You'll see one of Stevie's favorite patterns, right? That price relative strength divergent pattern where price starts moving in one direction without the appropriate level of strength. In this case here, it was the level of weakness. It wasn't getting weaker, it was getting stronger. You don't want to see a market moving that direction out there. And then the bulls show up and create all those bullish reversal signals. You know, the buyers and sellers just really have one role to play for you and I. And that role is to go ahead and paint candle signals that we can go ahead and put along with the different patterns that we trade out here. And that's really all that the market did. Right now, if we take a look at what the market is doing, the same type of thing. You're seeing a nice move higher, right up into resistance. It could take out that resistance level, which I'll call 2,099.25 to be exact and to be specific inside the ES Mini. If we see price break above that level, pull back, test it, and hold, then what you're going to see is the market move up towards its highs. Is it going to take out those highs from 2 o'clock in the afternoon on July 20th? I don't know whether it's going to take those highs out. Is it likely to go up and at least test that area? Well, if we just use simple retracement levels out here, and a retracement is nothing than a measurement tool for you and I, nothing more than a measurement tool to help identify different floors where the market will travel to. Well, you can see at the 2099 level, you've got your 0.786 retracement. I'm sorry, your 0.618 retracement out there. And that's off the longer term pattern. That's from the high that we took a look at on July 20th down to the lows out here on July 27th. So the next level to move towards is going to be 2111. If we see the market move above this 2099.25, that needs to be your expectation, your anticipation. If you're short the market and you don't want to take that kind of heat or pressure, then I suggest getting out of the kitchen. And if you're long right now, what you should really be doing is tightening up your stop. And we'll go take a look at a 30-minute chart here, but I wanted to make sure that we keep things simple, right? The old KISS theory as much as we can. I want to be able to describe. I don't want to be overly, like I'm an enthusiastic person just by nature out here, but I'm enthusiastic whichever way. I want the market to be moving in these large directions out here because there is nothing worse than doing a show where the market is moving in a very small, tight range out there. It's really difficult to provide you with any kind of good content out there. I'd rather just tell you stories or how to be able to motivate yourself or others or how to go ahead and meet the needs of your partners. But in any event, we've got a market that's moving. It's moving right now into resistance. We'll see if it is able to take that level out. That would mean, just to get an idea as to where we are at, because we can just switch over here to the, let's go take a look at the summation index. Summation index and price oscillator is a great tool to help us understand who is it that's in control of the market out here. Because look, you can be up 200 points and still not be in control of the market. Here's a perfect example. Here's the Dow. We take a look at its price oscillator. It has just made it up to resistance. You can see the reading here is 0.02 positive. Now, maybe all the Dow stocks are positive out here. Let me just take a quick peek. Now, there's two that are not. So certainly that price oscillator can finish above zero. You just got to get Visa in on the game. It's only down 2 cents, so that should be able to happen. And Coca-Cola, which is down 11 pennies. We get all 30 stocks inside of the Dow. Then what you're going to see in the summation index, you're going to see the price oscillator go ahead and make its way up above that zero level. What does that say? That says that the bulls are in control, and the bulls, in essence, I'm not going to say they were always in control. That would be pretty foolish considering they lost control of the market when it was up here at the highs back on July 16th. But you did have a nice little hammer candle that formed inside of the Dow when we came into the close on Friday. It was close, and guess what? It was a cigar. It was a nice big Cubano, Cohiba, maybe a Robusto, or maybe even the ones that I did like when I did smoke them. And I don't really care much for smoking, and I don't smoke cigars anymore. My favorites were... favorite was, see how much of a favorite it is? I still have one left. But in any event, you don't want to really talk about cigars out here. What you do want to see is you want to be able to see the Dow's price oscillator get above the zero level. You got a huge bullish engulfing candle going on today, wide-ranging bar. That is certainly to be respected. And what does that say? That says you'll see the price oscillator, if we can close above zero, most likely get back up towards that overbought condition, right around a reading of 2.5 out there. Where's that going to take the Dow? I don't know. We could take a look at some retracement levels, but let's not do that. Let's check in on the other two indices out here. Of course, the one that has been the strongest. It gets knocked around by a lot of folks out here, and I keep just shaking my head saying, are you kidding me? Because what has been the strongest has been the New York Stock Exchange. Yes, it's been in a declining price channel out here. But when we take a look at the market breadth, when we take a look at its price oscillator out here, it's been stronger than the Dow. It's been stronger than the NASDAQ composite, and that means that you cannot overlook that. Now, what do we see inside the New York Stock Exchange? Well above the zero level inside its price oscillator. Quite frankly, it is taking out the highs. Now, this is important for us to take a look at 4 p.m. At 1:17 in the afternoon, it just tells us where we're at inside the markets. But look, if the markets continue to hold on to these gains out here, that price oscillator is above the reading on July 31st, which was 60.48. You're at 69.45 as we speak right now. Strong like bull. And what does that mean? That says I would go ahead and put a descending price channel line inside the New York Stock Exchange data on your chart and wait to see what happens when price gets up to that level, because you take out that area and then you've got a change in trend that'll go ahead and take the markets. Today is what, August 10th? For the next 15 calendar days. We'll make it 14 since today is basically half over out there. And you can say, Steve-O, how the heck can you make that call on August the 10th out here? Well, I'll show you how it is that we can do that. I won't go into it right this very second because I know some of you out there want to understand what's going on inside the NASDAQ composite out here. Nice little gap up, price oscillator above zero. So all of that looks good. It's got a little shooting star candle, the opposite of the hammer that we took a look at inside of the Dow out here. That says that the NASDAQ composite has some resistance at the August 5th level, the August 5th high to be specifically. So the key area there is going to be 51.7526. But look, the NASDAQ is not going to get up there until or unless we see that 300-minute time frame or any time frame that you want to take a look at get above at least 2,099.25 and hold above 2099.25. You can look at my screen. You can see that this area has been significant pièce de résistance. Market could give it up at any point in time. We'll go take a look at the momentum in that 30-minute chart. I'll give you an idea why I said another 14 days out there. We'll take a look at Goldilocks and anything else that you'd love to. I'm Steve Rhodes with TFNN, and we'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 227, S&P up 25. It was Romeo and Julieta. That was the cigar that I was trying to think of out there. Quick story on those Cuban cigars. Used to be a big golfer out there and played a number of tournaments throughout the year. And my best friend, John, up in Jacksonville, he was a big cigar smoker. And I was visiting another good friend of mine in the Bahamas, John Bethel. John is he's a unique character in that you've heard of the Jamaican bobsled team. Well, he is actually one of the only Bahamians that I know of that has played in the NHL. He actually played his hockey up at Boston College, played with a number of the guys that were on the Dream Team out there, the original Dream Team. And played professional hockey up in for the Winnipeg Jets. Well, I was visiting John, and his cousin is one of the big duty-free shop owners in the Bahamas. And I remember sitting in his office and hanging out, and they were selling all kinds of Cuban cigars and stuff like that. And went ahead and he pushed one into my mouth, made me smoke one. I'm kind of like, I don't want to do that. But it was a Romeo and Julieta, and it was not too bad. And, of course, my buddy in Jacksonville, he loved the mere fact that I would come back. Yes, Cuban cigars are not legal in the United States, but John Bethel was good friends with, obviously, kind of a little bit of a celeb, I suppose, and friends with the guys at the customs when you go through customs in the Bahamas. And he just shoved those things in my golf bag out there, and I came back with with plenty of presents for my good buddy up in Jacksonville. In any event, you don't want to hear about Cuban cigar stories out there. You want to know what's going on in the market. Had a question inside the Tiger's Den to take a look at silver. If we do look at high-ho silver, here's the current contract, and we can see a nice breakout today. Good volume, wide-ranging bar. The question is, should you buy it on a pullback? And the answer is yes. The question is it going to pull back? That's really the question out here. Silver is up above really every level of, well, not every level. Well, I take that back. Let me see here. Is there any horizontal resistance that we can see? The top of the weekly box is 1518, and you're trading at 1528. Man, this is not too shabby. So this is a heck of a breakup. But the answer to the question is silver a buy on a pullback? The answer is yes. Of course, we can thank the commercial traders out there for giving both you and I the signal, because their less net short position as a percentage of open interest has been down at areas that have been associated with other bottoms. So we turned off all of the other fodder that is out there, and we just simply look at patterns. And we just look at patterns, and we know that if we go ahead and trade those patterns intelligently with stops in place, that we just let the market do what it's going to do, and we go from there. And when we get stopped out, we get ready to attack again unless something has changed with regard to the market. But do not trade without stops. So the answer to the question is yes, it is. And of course, one of the actual cool patterns out here that my clients and I use to go ahead and take a long position inside of gold is what's referred to as the choppiness index. Now, I had to do some research on this. It just happened to be an indicator that popped up onto my system. I was doing one of my pull-down menus a year ago or so, and I think it was after we did the full deal with eSignal, and we went live with them distributing through their software back in the last July. So it's been a little bit over a year out here, and I came across this choppiness index. Now, what's a cool thing, it was created by a guy, Bill Dreiss, who is you read his resume, MIT grad, Harvard grad, mathematics. He is this study here, this index is based upon fractal geometry, mathematics of fractal geometry out here, which is way above my pay grade. I'm more interested in taking a look at and understanding how it works when applied to the charts from a pattern standpoint. And what intrigued me when I started taking a look at his index out there was the mere fact that lines of trend termination and trend initiation were above a Fibonacci level, 0.382 and 0.618. And I said, hey, any guy who's created an index out here, an index, I should say, that uses fractal geometry, and he also uses our friend, yours and mine, Leonardo da Fibonacci, we've got to go ahead and take a look at it. Now, what's cool about this is we had several patterns inside of gold set up. We had a seventh wave pattern to the downside. That's that label of G out here. We had price move down below that 0.382 level. That's the red horizontal line on my screen out there. That says that the current trend is terminating. And, in fact, that's what it did. Now, this is really used in a choppy market. And we know that inside of gold, with the exception of a couple of moves, in this case here to the downside, that it's been a relatively choppy market. And unlike silver, that's out of the woods, gold is not. Gold needs to get above 1180. Nonetheless, we had a nice little full moon key reversal session. We saw that choppiness indicator get above the trend initiation line. Boy, moving above 1180 will be very, very bullish. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 229. The S&P is up 25 points. Let's go take a look at the markets and see what the story is of the markets, what the markets story is that it's communicating to both you and I. Now, I'm going to retell it. So, consider me to be like Burl Ives, from being a narrator from, the Rudolph the Red-Nosed Reindeer or something like that out there. And so all I'm doing is narrating for you the story of the markets out here. And we're going to begin by going back about 82 years where what I have done is I've just simply taken a look day by day what the average directional movement is inside of the Dow. This is for somebody that has no technical. Look, if you are a technician, you'd really get into this. You're a pattern recognition expert out here. And this is what has taken place over 82 years on average. And it's from a directional standpoint. And what's cool is that this is just a calendar year. It's a calendar year. I've applied it to the 2015 calendar year. So I take a look at each trading day. And on average, this is what has taken place. Now, what's really important to know here, and I did this really for my kids. I did this for my kids so that when I'm long gone, depending on where they may or may not be at with regard to technical analysis, they're still going to have to manage their money in the market. And so there's some very key things that both you and I are able to learn from this, such as, and I shared this with Tom on Friday afternoon. And most people that have a 401k, a Roth, they're making their own contribution, or even companies, they do themselves a very they very much do themselves a disservice. That disservice is they wait sometimes until April 15th to file their tax return, make their contribution, which they then go ahead and put into the market. Maybe decide to go ahead and add to a long position, some type of indice related fund out there. And what they've really done on average is missed out on the majority of the move. You see, you remember when the market was moving lower in January? I know many of you remember that, and people would be on the first 3 days represents the year and this and that. It's all like, okay, I guess so. It's cool. What I did know is I said, hey, look, the market's going to make a low. It's going to bottom out at the end of January. And in fact, that date was January 29th, I believe. Yeah, January 29th of this year. Now, look, February 2nd, we saw the market actually go ahead and make a little bit of a lower low out there, a little piercing candle, a little bullish engulfing session on the 29th. But that's really one of your key turn dates. Then there's another key turn date. You know, it's the old sell in May. It's the old hogwash of sell in May. Well, sort of hogwash out there because it's typically not May 1st when the high comes in. There's really two dates inside of May that you want to pay attention to. One is towards the middle of May. In this case here, it happened to be May 18th. But the reality is, and here's May 18th when you take a look at it on my chart out here, it was really May 20th when the actual, or May 19th when the actual intra-session high came in. But not too bad. We're using these we're using these like a for turn dates. A little brain contusion out there. But in any event, we're using these as turn dates for when the sentiment of the market just simply changes out here. If you take a look at that next, really the market, the Dow, I'm specifically speaking about the Dow here, actually makes the sell in May high in July. Just by a fraction over, well, in this case here, it really is just a fraction over what takes place in May. But price-wise, we use this more with regard to turn dates than we do as so much as the average directional type movement out there. We'll talk about we'll certainly finish off the show taking a look at directional indicators out here. But this is a really good one. And hey, look, that next turn date, that July 20th time frame, well, that actually hit right on the spot as we speak right now. So July 20th was a high. Now, here's the real key. Here's where we're at right now. And where we're at right now, the market was supposed to make a low tomorrow. That low came in, that tide came in on Friday. Nice hammer candle out there. We had nice little rising rising advanced decline line in the New York Stock Exchange, where the Dow was actually making lower lows. I mean, it had really everything that you needed. Look, here's the key. The market, I say, is going to move up or sideways or something before the next turn date happens. It doesn't really take place until August 25th out here. And what you want to do is you want to go ahead and make sure that you're preparing for that. How low is the market going to go from here and what you should do? That I don't know. But there's other tools that both you and I can take a look at. And then what the time that we're going to come back into the market. Look, this is assuming that nothing else takes place, because I am willing to take a look at new information as revealed to me each and every day, as you should be as well. But we've got a roadmap here. We've got a triptych that becomes real easy to follow. There's no reason to think that the rest of the year will not follow as it has this year. And from a longer term standpoint, to make it easier for folks here, go ahead and apply a 21 period exponential moving average to a chart of the Dow. That's what you're looking at on my screen here. Now, what you're looking at is a modified version of that I custom built for me, but yours is going to be very similar to this. Yours won't turn from blue to red, and there's a reason why mine turns from blue to red more than, and I'm not really going to get into it, but you can take a look at, what's most important is taking a look at where we're at right now in the cycle. And that cycle says that that's a key level of support, which is right around 17,000 area. And, you know, those key reversal sessions, we took a look at a key reversal session inside of the gold, the daily gold chart. They're real key because they identify areas of resistance. You can take a look at those as they've appeared on the monthly chart time frame. here for the Dow. And of course, we talked about a shooting star and a hammer earlier as well. So we'll just simply point those out to you because they are areas of resistance. But what's really key is when you see those key reversal sessions is that they identify these levels of resistance. When you get above one level of resistance, you're going to go up to the next level. When you can break through that, price is going to move higher to wherever you can use other tools out there, expansions of swing points, things of that sort. What I want you to understand is that these set up really key levels of resistance. You know, it works at support as well. And if you take a look at the key reversal session back here inside of the Dow on a monthly basis, we know that that acts as a key level of support. Just take a look where the March 09 lows moved down into. And yeah, they closed just slightly below that back in the February 09 timeframe, but in March of 09 closed right back above it. It rejected. And if we take that line and go a little bit further to the left out here, that's what really set up our consolidation pattern. And that consolidation pattern between these levels of support and resistance, and once the Dow broke above that level of resistance, well, that set up that measured move for both you and I. And that measured move says that price ought to move to 20,500. Now, we're in the unfavorable seasonal cycle. We're in the seasonal cycle where come August 25th, and maybe it's a day or two on either side of that, I don't know, but we want to prepare for that date specifically, or right around that level. And what we want to pay attention to is what happens as price and if price in fact moves lower out there. You don't need to jump to the short side. You don't even need to go to cash out here. But if that price starts moving below that 21 period exponential moving average, you might want to consider going to your fund manager and saying, you know what, if you are tracked to the stock indices, the S&P, the Dow, the composite, the Russell, something like that. If you are tracking something else, then what you really need to do is subscribe to a newsletter like mine and then establish a relationship, and I'll specifically go take a look at your specific portfolio and assist you with that. But until we see price get below that 17,000 level out there, everything is just okay. But if it does get below that, then there's areas of support that we're going to have to really take a look at. When we began the show, we were taking a look at those sideways trading ranges. Now, I was doing it based on closes, but if you take a look at between April of 99 and 2001 out here, you're going to see a 2.5-year sideways move. We're taking a look at a monthly chart out here. Those are markets that are very difficult to navigate if you're going to try to trade the indices, which you really weren't doing back in 2001. But if you're doing it now, those are markets that are very choppy and very difficult. Look, back in 2007, the market moved sideways for a year before it really decided to cut loose and get below that 21 period exponential moving average. Take a look at where we're at right now, folks. We are in month 12 as we speak right now. So maybe there's something more to it. I'm not going to be the one to determine that. You're not going to be the one to determine that. The stock charts are going to be one to determine that. Knowing what to do and doing what you know are two different things out there. And what we know that the market has been doing, it's simply been moving sideways out there. So look, you can get a free trial of Mastering Probability. Come on over to the homepage at TFNN.com, or just go to TFNN.com/Steve. That'll take you to the page out there. You might have one more click or two, and you can test drive that for the next 30 days out there. So I hope that that gives you, that is the story of the markets. It doesn't get any more complicated than that. It's not any more simple than that. It's a set of tools that makes it very easy for you and I to be able to make a decision. We don't need to call the next crash. We don't need to deal with the next 7-year cycle or anything along those lines. We just have a keep it simple, basic set of tools that will allow you and I to be able to navigate. What we're most interested in are for those of you from the long-term standpoint. You know, the long-term funds out there, we're not at a stage where you need to take any action. But if we start getting below that 17,000 level, unless it's real close to the end of October, you know, we start doing that in earnest. Then we've got to take a look at something else that is going on inside of the market. So I hope that that assists you with understanding what the market is doing. I mentioned, you know, I'm taking a look at a directional movement style type indicator. Really, all that we're looking at is what are the averages of when things turn. When does sentiment seem to change inside of the Dow for whatever reason on average? And we want to go ahead and pay attention to those dates out there. And that we will. If we take a look at, you know, what's going on in the market right now, with that, go back to that 300-minute time frame chart, we can see price is up at the high of its day inside the ES Mini. Looks like that 2099 area is certainly going to be under attack. But when I take a look at a 30-minute chart out here, and this is a 30-minute chart that we've got on my screen. This is a very cool directional indicator, the directional movement index, in essence, created by Wells Wilder out there. And it's a very cool tool because it helps you to identify when the trend is about to change. It doesn't tell you where the trend is going to move to, but it tells you when the trend is about to change. You're going to see a little red horizontal line on my screen out here that's labeled as 40. If I were Wells Wilder, I would have gone ahead and said, hey, you ought to use that 0.382 level out here. But he uses 0.40. Look, it doesn't really matter much. When you can see this directional index moving up, it doesn't matter whether the market's moving down or not. This is what really kind of people don't get. This is a tool to tell you about the power of the trend. That's all that it is. So if price is moving lower and this trend line is moving higher, it tells you got a really strong trend out there. But once it gets above 40, as soon as you see that first tick that moves to the downside, this is a 30-minute chart. We haven't seen that take place just yet. As soon as you see that takes place, that is when the market begins to stall. That's all. It just begins to stall. Doesn't mean you sell and you jump to the short side out there. You really want to take a look at other patterns. If you go back into about the July 24th time frame, that's how far back I've gone just here on the left hand. Well, just come back. Actually, this is the time period here of July 23rd. And you can see how as soon as it made that first tick out there, it called a bottom. You saw the market retrace. Looks like probably about a 0.382 retracement level before the market continued moving lower. So the market is using up a ton of nice directional energy out here. It's getting up to a significant level of resistance. It's why I would suggest you just can't hop on board here because once you're above 40, the market is destined to this index is destined to start making some kind of a turn out here. Take a look at it back in July 24th. Again, a little bit of a retracement. Take a look at back here during the July 27th bottom out here. And when it starts moving down, okay, it's losing its momentum. That's all. But where I'm asking you to really pay attention to this this indicator out here is really where it makes its turns. You can go back and take a look at August the 5th. Nice, big, strong momentum move to the upside out here. I mentioned it's very difficult to use momentum indicators for your trading style, especially if you're trying to play, maybe daily type trades out there and trade some of the ETFs because you're in that sideways market out there, that choppiness index type market out there. And it doesn't mean that you can't use something that helps you to help you identify when a trend is going to be terminated, or just simply an additional tool. Maybe you're using a test of a swing point with lighter volume. We'll go take a look at the swing points out there inside the index ETFs. But this really is a tool to assist you. So I know we're coming up towards resistance. I know we're well up above that 40 level. You're at 48.15, and any turn says that, hey, the market can do. And then we have to measure the retracement to determine whether or not it's really just setting up an A to B equals CD, or is this where the sellers actually walk in to the markets? I don't know the answer to that because when I take a look at here's a little bit of an indication. If we come over and take a look at that ES Mini, here's your 30-minute chart out here. And let me just simply update this, one of my tools. And you can see that the market, if we take a look at the bodies of the candles out here, they're communicating to us as well that things are starting to get a little bit difficult from that momentum standpoint. See these small-bodied candles, the body of the candles, the essence of price, other than the open here from 9:30 to 10. Or 10 to 10, yeah, from 9:30 to 10 o'clock. We really have, and there was a slight move up here from 10 to 10:30. It's been a slow grind to continue to get up towards those resistance areas, and we're seeing just simply small-bodied candles. Looks like over the course of the next couple of hours or hour, we ought to get to a seventh wave pattern. We ought to see some kind of retracement. Now, where is support inside here on a 30-minute chart? I'd actually look for support on some longer-term time frames to be able to identify that. So that's just also putting it all together, but putting it all together with regard to the story of the markets on a shorter term time frame out there. I did mention we go take a look at the ETFs. If ever there was a unified signal across the board inside the Qs, the Russell, the SPYs, the Diamonds, they all, when you and I took a look at it on a daily and the weekly basis, we saw them all running into swing points on what? Light volume. If ever there was a rejection of price, with price and volume, it came from across the board. The Qs, you're looking at July 28th, that had volume of, 33 million shares, and on Friday, it tested it with 30 million shares. Light volume test of a swing point. Can't bust them down, gonna try to bust them up. What's that mean? 112.06, the next stop inside of the QQQ, if the ES can take out resistance. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 233 as we speak right now. You know, the euro, Japanese yen, the key level, that's moving higher as we speak right now. If it can clear 137.79, just simply because of the directional correlation that it has with the U.S. stock market, no better currency pair to keep track of than the euro, Japanese yen. If it can take out that shooting star, that resistance level, price ought to move up to the next resistance level, 141.05. That's going to be enough liquidity to take out that 2099 level inside of the ES Mini. If we take a look look at the Euro-Japanese yen here, this was the one that was pointing to the mere fact that we were going to make another bottom. I know nobody wanted to listen to what I had. Well, I can't say that, but I got enough cards and emails and stuff like that people were like, Rhodes, you're out of your mind out here. I am crazy out of my mind to provide you with the best information possible so that you can make the best trading decisions out here. And if we take a look at the NASDAQ futures contract moving lower, the ES Mini moving lower, and what was the Euro-Japanese yen doing? Making higher lows out here, higher bottoms, and that's really important to be paying attention to. If we take a look at what's going on, a lot of times people will just say, hey, it's just the top weighted stocks that are moving the market, and I'd say inside the Qs, hogwash. It's actually the equal weighted ETFs. That's the QQEW. That's the top portion of my screen out here. That again has broken above its descending price channel. It is the real weight in the around the neck of the Qs. The NASDAQ is really the weighted ETF structure here. It has not broken its descending trend line out there. Again, these are based on closes. If we take a look at the S&P 500, a little bit of a different story out here. It's showing that its strength in both the weighted indice as well as the equal weighted indice. We can see both have broken above trend lines. In this case here, a little channel line inside the RSP. That's the equal weight. So that looks very bullish. Again, it's got to take out that ES Mini level, and then you're going to be off to the races back up towards the highs. Whether it takes them out or not, I can't say. You have that GE and the Dow. That's back to giving us nice signals out here. We had GE from a closing standpoint making similar lows as it did back on July 24th, and the Dow was doing what? Making lower lows. GE, the bellwether for helping us to identify where the Dow is wrong with regard to its move, either to the upside and or to the downside out here. So we had nice signals there across the board. Of course, there is some difficulty on the horizon out here. If we take a look at what's going on for those seeking high yields out here, we take a look at the Western Asset High Income Opportunity Fund. That's going in the opposite direction of the S&P 500. That continues to make lower lows, where the S&P is in essence making higher lows out here. That is going to come home to roost. Of course, I was reminded that in 1987, the high was on August 25th of 1987, and I've mentioned that the S&P should move higher into August 25th of 1970. And no, I am not trying to forecast a crash or anything like that. We're just, and by the way, you could have bought that August 87 low in October, just as we're going to go ahead and buy that 87 low in October this time around too. Or at least we anticipate that we are, but we're a long ways from that, and we'll take a look at the signals then as well. So today, folks, I hope that you've been able to take something, because there have been many morsels of information from the show. But stay tuned, because the education continues. Our man David White, nicknamed Polar because of the Power Law Vector Indicator. He's going to be up to give you his take on the markets. He's huggable. He's squeezable. And stay tuned for a great show. Then we got the Tom O'Brien Show from 3 to 5. Have a wonderful Monday, magical Monday. And I'll look forward to seeing you on what's usually Turnaround Tuesday. Something to think about. Take care, folks. See you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.